The entire crypto market might be ready for brand new all-time highs this week. What we discussed in last week's update is exactly happening right here on Bitcoin. I told you guys that there was a higher probability for a potential deviation below the range low instead of a potential breakdown further towards the downside. I told you guys to realize that after this breakdown over here, if the price of Bitcoin was truly bearish, it wouldn't really offer a perfect retest of that very obvious range low area like this, right? Instead of offering that perfect retest and providing the opportunity for everyone to get in on this move, instead what it should have done was consolidate over here, get a bit of a local sweep, break down again, lower high, and then continue to the downside. Instead, it did indeed offer that perfect retest, and I told you guys because of that I was preferring a potential deviation rather than trading a potential breakdown. That is usually what I always do. I always prefer to trade potential deviations rather than breakdowns. So what we have over here is Bitcoin that is still range bound, that is now potentially confirmed the deviation below the range low. The only confirmation that I would like to see is to get a solid daily candle close today. If we do get a solid daily candle close today, preferably above this entire previous bearish fair value gap, if we get a solid daily candle close today, then I think that the bottom is in on Bitcoin, and then you have a very super clean invalidation once again below the deviation of the range low, and as a target you are targeting the range high liquidity pool, which is basically a brand new all-time high for Bitcoin right over here. And that is my brand new target for Bitcoin if we get a solid daily candle close today. That also means that, let's say we do get that solid daily candle close today above this level, then we can identify potential areas where we can look for potential swing longs with a clean invalidation and a very clean target. That means that I'm going to start off with a clean chart over here. I have my range low, I have this previous bearish fair value gap over here, right, that I just marked out, but we also have this previous bearish fair value gap on the daily time frame obviously as well, that we have already flipped by now. So definitely some bullish signs across the board. Also, if we go back to the 4-hourly time frame and we switch on the 100 and 200 EMA, which are the most important EMAs, especially on the 4-hourly time frame, what can we see? That we are currently flipping these EMAs, and that is a major bullish sign as well, because you can see over here constant support, you can see over here constant resistance, and then once over here constant support, and then we broke down beneath these EMAs and constant resistance all the way towards the downside. We are currently flipping these EMAs on the daily time frame. We can see that we are trying to flip the 100 EMA as well, and then we have already reclaimed the 200 EMA. So definitely major bullish signs across the board. And also on the daily, if we switch on the RSI, what can we see is that the bullish divergence on the RSI, higher low, low on the price section, is currently in play as well. So major bullish signs across the board for Bitcoin. If we get a solid daily candle close today, in my opinion, it is long your longs season, and that also means that we can identify potential areas for a potential long. Now what is interesting to me for now, but like I said, I really want to await the daily candle close over here for Bitcoin, is that we have this low over here. This low, right, is the low that started this impulse towards the upside, where we got this fake break of structure, right? So I think there's definitely plenty of liquidity resting over here beneath that low, which also means that this low is also the perfect retest of that entire range low area. So now a potential area where we might be getting into a potential long on Bitcoin for now, if we get a solid daily candle close, and obviously that might change because of the price action, is this low potentially over here. This might be a potential nice area to get your first entry. Like I said, this low can be your invalidation, or you can use this low, and then as a target we are going to target brand new all-time highs for the Bitcoin price. And if we target brand new all-time highs for the Bitcoin price, that means that we are looking at a potential RR of approximately 2, and that is exactly what we want to see when we are looking at a big swing trade like this. This is a high probability trade for me. For now, this is the potential execution that I'm looking at, because this is also aligning with this indeed breaker block over here. So we have this previous supply area that is exactly aligning right beneath that low. So that low is basically acting as an inducement for that supply that should now turn into demand. Also, Ethereum is looking super interesting and is already recovering the most of the previous dump. Now when we zoom into the local price section over here, we can see that we have a beautiful range for Ethereum. with some very, very nice pivots. So besides the higher time frame range, we have this mid time frame range as well, in which we are currently simply holding on to the range low, and we have swept the low over here. So if I quickly remove the range for now, what can we see is that we swept this low, but we front run this low. Now, why is it in my opinion super bullish? And this is also something that in my opinion a lot of people don't understand when it comes to liquidity. When it comes to liquidity, it comes to human behavior based off previous price action, right? Because of human reaction based off previous price action, smaller players in the market, the retail traders, and those are the kind of stops that we want to use as our liquidity. They make certain decisions. They make the decision to put their stop loss at a certain high or at a certain low, right? Now you have to realize that for potential long positions and potential short positions, they always want to use the tightest stop loss possible. Why? Because it offers the highest RR. So if I quickly have to make a drawing over here, for example, let's say we get a push down, and then you get something like this, right? Now, this is your break of structure. This is the trigger for a lot of people start looking for longs, and they start looking for longs upon the pullback, right? Let's say they start looking for longs and they're looking for a potential invalidation for their trade. Now, a lot of people are using this low over here, right? And these are the stupid people. These are the impatient people that have no discipline or whatsoever, no solid strategy. They're using the tighter stop loss over here, this low, instead of using this low. Now, why are they using that low instead of the other one? Because if they use this low over here, as you can see, it offers an RR 3.64. If they use this low, it offers an RR 3.4. So it is a slight difference, but you have to realize that retail traders are greedy creatures. So that means that they want to use the tightest low to cover the stop loss for a higher RR, but also when it comes down to take profit, right? Let's say we have this kind of price action over here. Where are they looking to take profit? You think they want to take profit at this high, or they want to take profit at this high? I know that they all want to take profit at the highest high. Once again, it offers a higher RR, 3.13 compared to an RR 2.75. Why? Because retail traders are greedy creatures. They want to make the most amount of profit possible instead of looking at what is actually the highest probability possible. Now, in this case, there's more liquidity resting over here, right? And that once again comes down to the people that are once again looking to short the pullback over here. They want to look for shorts over here, and they're going to use this high as their stop loss instead of this high, because once again, it offers a higher RR. And instead of looking at the RR, what you actually have to do is look where the liquidity is actually resting. Now, for example, in this case, with these lows over here, the liquidity was actually resting over here, because this was the tightest low to cover the stop loss for the people that were looking to long the pullback, right? They thought, oh, we're never ever going to take out these lows over here, so let me use this low instead of this low or this low, right? But instead, you always have to use the lowest low, that is the start of the impulse, that gives you the trigger and the break of structure to long the pullback, right? But retail traders, they don't understand this, which means that the people that opened up shorts over here or on this push to the downside, where are they looking to take profit? They're all looking to take profit over here. And that's exactly the reason why it's so nice that we swept the actual liquidity pool over here, right? And that we front run the actual take profit target over here. Why is that such a nice case? Because that means that the retail traders that open up shorts over here or on this push to the downside, those short positions are still running. Why? Because they didn't close yet, because it didn't take out their take profit target yet, which means that because of the reason that the shorts are still running, there's still a drawn liquidity towards the upside, because it means that the positions are still running. That also automatically means that the stop losses are still resting at certain highs. So we have a clear drawn liquidity, we have a clear range, we have a clear sweep of this liquidity and sweep of this actual liquidity pool, and now all that we have to do is start looking for potential triggers. Now, in my opinion, what is a very bullish potential outcome is that we are going to close today's daily candle above this inversion over here. If we flip this inversion, I think you have a high probability to start looking for longs inside of that inversion. Then you have the previous breaker block over here, also exactly aligning with that inversion. And then I think that Ethereum is definitely creating a very nice area to look for potential longs on the lower time frame. What can we see? Right above the breaker block, right inside of that inversion, we have some local liquidity resting over here beneath this low, which means that if we get a bit of a flush tomorrow, maybe take out Monday's low, if we form Monday's low right over there, obviously we can start looking for longs, potential first entry exactly around that area, right? Very clean invalidation. Where is the invalidation? When we zoom into this price section, this low, guys, is not the invalidation for this trade. It's actually this low, because this is the lowest low that we form, and this is the low that started the impulse towards the upside that is giving us a trigger to start looking for potential longs on Ethereum. And now as a first target, we are always looking at the second to highest high. So once again, it's not this high that is our first take profit target. No, it's this high that is our first take profit target, because this is where the actual liquidity is resting. And now afterwards, also taking into account our higher time frame buys, also taking into account our higher time frame cycle, we can target brand new all-time highs for Ethereum, and that should offer us a beautiful RR for the swing trade of approximately 4. Guys, PrimeXBT now also offers a lot of crypto futures trading pairs, so definitely go and make sure to check them out. The link can be found in the description. If you sign up through a link, you also get a 7% beautiful deposit bonus.